Hi guys, please like, share and subscribe. And if you want full course for any actuarial subject, visit theactuarialguy.com or WhatsApp on this number. Thank you. Hello and welcome, guys. Today we have Mrigank Agarwal with us. Mrigank is a fellow of the Institute and Faculty of Actuaries, United Kingdom, and is also a SERA, which means Certified Enterprise Risk Actuary. Mrigank started his career as a life and health insurance actuarial professional with a reinsurance company, multinational reinsurance company, and then moved on to a big four consulting firm where he's been working for the last 4 years in the banking domain. He's on the banking advisory groups of both IFOA and IA and has recently moved to London, working with the same big four consulting firm. Hi, Mrigank, how are you doing?
Hi Romit, thank you. Thank you for the introduction. Yes, I'm doing well. How about you? How are you doing?
Doing well. So, Mrigank, you qualified actuarial science very, very early. Now you're working in banking and have been able to move to a first world country, European nation, right? In many terms, one would say that you're living the actual dream, right? What does that feel like?
I think to be fair, it feels really great. I started my actual journey in college, and these were one of the few aims that I had or my goals to complete. And eventually, it did take a lot of hard work, but as I would say that I'm going through my list of ambitions that I had as a student, which I had seen. So
Right.
it feels really nice and really happy to be here
Got
talking to
it.
you about it.
Got it. So let's go back there. When did you start actuarial science? How old were you then?
Back, um, I started actuarial science. I gave my first paper in the first year of my uni degree. That was my
Okay.
first year of college.
Okay.
I just had come out of school, so
How
maybe
did you
like
come across actuarial science? Where did you hear about it from?
Actually, actuarial science was never on my plan. I was planning to become an engineer, and then after my 12th grade, I thought I'm more inclined towards economics and statistics. So I moved my journey from like more of an engineering thing. I had been giving JE and JE Advanced, and I was like, no, that is not my calling, and moved to economics. And with economics, I was talking to people on what all are there, which people have been doing alongside, and someone suggested about actuarial science. And it's very interesting because even when I was giving my first paper, I never thought I'm going to continue with it. It was like, okay, let's just give one paper at a time and see. And one led to another, and eventually, like maybe like last to last year, I qualified. And that's when I realized, okay, I did actually complete the journey rather than just giving one paper.
Right. Right. So, what was the initial calling for you? Like, what was so attractive about actuarial science for you?
I think what really attracted me is the blend of the subjects that it had. Uh, I was giving CT1 back then, which is now CM1, if I'm not wrong. It
Yeah,
had a lot about
it's been merged
discounting.
with CT5 to become CM1.
Correct, correct. So it had a lot about discounting and future forecasting and like discounting cash flows, and it just made me. It was more of a mathematical angle, and it just attracted me a lot. And I was like, wow, these sums are really nice. So as a student, as a young college student, I felt very attracted to the mathematical aspect of it. But I think as I grew in this profession, I could see different angles coming in. Uh, the structure is so great. Like it has a lot about economics, it has a lot about statistics, even the kind of problem solving capacity that it builds eventually. If I know you are teaching, so you might have seen all the CS2 problems. They are really fantastic. Like you see the real world in a very different angle. And as you step up, you see all those real world problems in a very theoretical way, and how you solve it just not with pen and paper, but understanding the expert judgment, understanding the scenario around, using your professional skepticism. So eventually, I think it's a very wholesome course. It talks a lot about communication, it talks a lot about the wider audience, the wider knowledge, and not just talking about a few book points. So as a whole, I think I was when I started my career in 2017, I did not see the entire picture of it. I was more inclined towards the initial papers of stats and maths. But eventually, coming across these papers, I was just mind blown with how well this is structured and how this is changing me as a person over time.
Got it. Agreed, 100%. In the initial exams, that dopamine that comes from cracking those complex
Yeah,
math problems, it's a great mood booster for sure and a
right,
motivator, and then eventually like it just widens and widens.
correct.
That is true. So from there till today, now what is the most satisfying part of your work for you, or what really brings you joy?
I think I I have a very similar mindset even from like when I was a student or right now. I try to try solving like new problems. That's one thing that really attracted me to banking as a profession,
Hmm.
because I was reading a lot about insurance, reinsurance with my actual science, and I was like, how can you use these problems in a like a more of a non-traditional way?
Hmm.
And that's when I came across banking. And even right now, when I help different banks across UK and abroad, it's more like they have some different problems, and as actuaries, I bring a very different skill set in terms of my understanding. And I feel like, okay, how can I use my actuarial concepts in these ways? And to be fair, I get very excited. For example, when I talk to my juniors who are also doing actuarial science, I'm like, listen, we studied this concept in CS to see how it's getting applied over here.
Got it.
So linking in things, solving problems that are completely new, it gives me immense joy, and I'm quite boosted by these things in my
So,
career right now.
so is it the variety of problems or the depth of them? What is
I would say both.
okay?
So I think
Which one is it more for you?
it depends. Like there are some months where I work across quite a few things.
Mm-hmm.
Some of it might be light touch across quite a different kind of risk, quite a different kind of projects.
Hmm.
But there might be times where I focus a lot on one problem. For example, building a model from scratch, where
Hmm.
you just get into details of one aspect, trying to uncover everything.
Hmm.
And there might be times, for example, when I'm reviewing something
Yeah.
or reviewing a client model,
Got
trying
it.
to understand whether the model is capturing enough depth, enough scenarios, is it
Hmm.
able to pick, rather than going into very detail of each and every aspect.
Got it.
So it depends on the project. And I
Got
think that's
it.
the beauty of being in a consultancy, where you
Hmm.
get to explore quite a few things, both depth and width,
Got it.
depending on the project you are in.
Got it. So let's talk about your transition from life and health
Yeah.
initial projects towards banking. How did that opportunity come about? Were you actively looking for something which was into finance? Because I know that's an
Mhm.
aspiration for a lot of candidates, right? Or did it just organically come and you
Yeah.
grabbed it with both hands?
Yeah. I think, to be fair, it wasn't planned by me. When I joined my first job in life and health as a reinsurance in the reinsurance domain, that was more like the availability of job back then. Because I think now I see there are a lot of opportunities for young actuaries who are freshers. But when I just moved out of college, there was very limited opportunity,
Which
especially
year
with
was
COVID
this?
being around.
Which year was this when you moved
Uh,
out of
it,
college?
it was in 2020.
Okay.
So COVID had struck and there was very limited opportunities. The
Got
market
it.
was dry.
Got it.
So I came across reinsurance, life and health. It
Hmm.
excited me back then.
Hmm.
I was there for a good about 8 months to 1 year, where I worked a lot on experience studies.
Hmm.
So working with a lot of data,
Hmm.
doing a lot of coding on SaaS. I think that had a very strong foundation for me in terms of coding and data
Got it.
manipulation, which is still very useful now. But eventually, I moved to this other company through the grad program.
Hmm.
It was a Big Four consultancy, and there was the first time when I saw something like a banking. Actually, they
Hmm.
had an option of that.
Hmm.
And to be very fair, I had never heard about it. And even when you Google banking, actually now you still might find some resources.
Correct.
Back then, there wasn't a lot.
Yeah.
So, and I always had that uh, desire to do something different, see where I can use my skills apart. I'm like, okay, let's try banking. Actually, did a
Hmm.
few projects, started liking it, and then I think, yeah, time flies once you get into something.
Got it. So as soon as you moved into the consulting role, your career moved into banking, or did you do some early work on life and health again in this space and then moved into
Yeah.
banking? Okay.
I think I moved into banking as soon as I joined consultancy,
Hmm.
but I have been doing life and I did life projects. There were a few life projects I did like
Okay.
on the side. I
Got it.
also did a few on the commercial and governance side, like helping
Hmm.
corporates with
Hmm.
their problems, which is again
Got it.
very interesting for an actuary to do.
Got it.
So I would say it's been a mix of my career, but mostly now I kind of specialize in the banking domain, and most of my
Yeah.
projects are banking related.
Got it. So with that, let's just get into what does a banking actuary do, right? Because that is a question I'm sure is on the minds of all of the viewers who have clicked on this video.
Yeah,
Uh, I come from a background where I've done my master's degree in economics, and a lot
yeah,
of my friends work into banking and credit risk roles,
yeah,
right? Some of them have also moved into market risk now, right? So very keen on understanding how is an actuary working in that space and what is the value that we are adding there. What is the
correct.
unique proposition?
Right. I think that's a good question. A lot of people ask me this question, like when I say that I work as a banking actuary, it's like, what do you do? How is it different? So maybe I'll just take a step back and kind of see what, as an actuary, we are good at. Based on what we have studied, we are really good with statistics, economics, mathematics, problem solving, communicating. And most of our roles, if you look at in the insurance side, are very similar. Or on this parts, we look at valuation, pricing, capital, talking to stakeholders, explaining them the complex numbers. In banking, we do a very similar role. It's more like uh, there are various aspects in banking which we cover. One could be mostly on the risk side of stuff. So maybe like credit risk, market risk, operation risk. In operation risk, we have like cyber security risk coming up. Then we have the climate risk, which is playing a very key role where actuaries are getting actively involved. Then on the treasury side, asset liability management. Then on using some advanced models such as fraud detection. So as actuaries, we are very good with numbers. We are very good with modeling. We are very good to understand the links between things. So we are actively contributing it. Apart from that, personally feel as actuarial fraternity, we are very strong with integrity because maybe we have been taught about it. We see a lot of problems around that. We do a lot of ethic classes. So as individuals, we are very good to contribute across quite a few variety of stuff, not just the risk side of stuff. So eventually, I've seen actuaries getting involved with a lot of strategy side of work for banks, helping the bank grow, develop new products, maybe get into new markets. Then there are actuaries who are involved with liquidity side of stuff as well. Market risk, as you mentioned, like derivative pricing. Some actuaries I've seen also get involved with the investment banking side of stuff. So I think it's across a lot of things. Maybe risk management, governance, strategy. As actuaries, we can work in all of these domains.
Right. So I think that still sounds pretty high level, right? I want to get into the depth of this, right? Like, what are the specifics of the kind of problems that you've been working on, right? It's been 4 years for you in
Yeah.
this domain. Who is a typical client for you? Is it a commercial bank? It
Okay.
is a commercial bank, right? And
So
yeah.
maybe I'll let you
And
complete.
what is the specific problem that for them that you're solving? Let's focus on risk because that I believe has
Yeah.
been a major area, right? So now what is the core problem that the business of the bank is facing, and where is it that you are adding value?
So in terms of my clients, I would say like in the banking side, there are three major kind of banks that we can cater to. One could be like the retail banks. For example, if you and me we want a loan or we want to save our money, we go to like all these high street banks.
Hmm.
The other one would be like a commercial or a wholesale bank. So the big companies, if they want to get loans, they go
Right.
to these banks. And
Got it.
like the third category, I might say about investment banking, which is kind of raising equity and getting money on the bigger side of things.
Okay.
So my experience has mostly been with the retail and the wholesale bank.
Okay.
And if we talk about the kind of work, I've been across like credit risk, some of the market risk stuff, operation risk stuff. But I have worked intensively on the credit risk part of things. So one of the accounting principles that is called IFRS 9, which is still upcoming in India. We don't have it in India as of now for the bigger banks. Uh, in UK, in Australia and South Africa, it's still a thing, and a lot of banks have to calculate IFRS 9 ECL numbers. So IFRS 9 ECL for a bank is very similar to reserves for a insurance company.
Okay.
So the way actuaries in insurance company calculate reserves, that is what is the expected claims that might come in the future. In banks, we calculate what is the expected credit loss that might happen in the future for all the loans a bank has given out on. So
Okay.
I've been helping banks audit these numbers, validate the models, develop these models. That has been like one of my really interesting projects across the past few years.
Right. So you are basically talking about loan defaults here, is it? That is what
Yes,
you're projecting, right? Loan defaults in terms of both amount and frequency.
exactly.
Okay.
So that's what makes it a little more interesting. It's just not the count of defaults,
Hmm.
it's basically quantifying what is the expected loss amount.
Right.
So you have to do multiple modelings. It's just not the one account level modeling. It's more
Hmm.
about the amount modeling. What is the probability that account is going to default? Then seeing the discounting rates. So within this one exercise of calculating ECL, as an actuary, we work on across quite a few models,
Okay.
building it from scratch or reviewing it, and like all these statistical methodologies really excite me.
Got it.
So
Understood. Right. So this is one part of your work where you are building these ECL models, and of course they have to be then compliant with IFRS 9. Right. The value addition for bank, is it in only in terms of complying with the IFRS 9, or does it add value to their business itself? And this is a core part of their business because this model is needed from sort of a correct projection point of view, so that they can have the right sort of capital in place.
yeah, I think it's important. These accounting principles, whenever they come out, these are really important. A, for the bank's regulatory perspective, banks will have to disclose the numbers in that way. B, it's just not about disclosing, it's about how banks use these numbers. Because if banks spend like uh, a very big chunk of their resource building these models, maintaining these models, reporting on these models, it's just not for disclosure purpose, it's about how bank also use it. So a very like a similar example would be when you do your valuation in insurance side, you look at those numbers when you're pricing a policy as well, because that's how you understand what is the expected claims you're gonna have come across.
Yeah.
When you look at pricing a loan, for example, the pricing of a loan might be the interest you're charging. You have to understand what is the expected credit risk that is going to come up, because at the end, whatever losses a bank is going to make is going to cover up by charging interest rate, right?
Interest. So basically, riskier the portfolio, the higher should be the interest.
Exactly.
Yes.
But it's just not about risk differentiation. It's more about collective effort of ensuring that the bank as a whole is not getting a loss, right?
Of
So
course.
A is risk differentiation, B is understanding that you are keeping margins in place, buffers in place. So you need to quantify a number that, okay, if you are kind of lending out 100 crore in 1 year, what is the expected amount that you're going to lose in the next 1 year because of this 100 crore? Which you can factor in such a way that you can ensure that you charge enough interest across your entire portfolio to make up for any losses that is going to come up.
Got it.
That is one way. The second way is keeping enough provisions in place that these, if these losses come up, the deposit holders are not penalized. You have enough capacity to pay back the deposit holders.
Yeah.
See, when you calculate the capitals are basically unexpected losses, right? So
Hmm.
you need to understand what is the expected loss part of it before you deduct.
Hmm.
So as these accounting numbers might not directly feed in,
Hmm.
there are some adjustments that have already always get taken place. Expert judgment is there, but it
Hmm.
gives a very good understanding of what is the expected losses for a bank on the portfolio.
Got it. So you're essentially doing what actuaries would be doing in insurance. One is pricing, which in your case is determination of that interest rate number, right? Second would be what are my expected, claims, or in this case, losses or defaults, and in that case, how much, money do I set aside to cover for it, right? And then finally, accounting also for the unexpected losses or sort of outlier events. Then it fits exactly into, no, or am I oversimplifying it a lot?
I would say I agree with you. It's not exactly what all, I don't work in all of these areas, but as actuaries, we have the knowledge and the skill set to work in all these areas. So
Got it.
I know people who are working in different areas and different capacities. But
Got it.
having said that, yes, as actuaries, we have the knowledge and the skill set to contribute into these areas for banks as well as insurance companies.
Understood. So when you say skill set, are credit risk modeling frameworks included as a part of the actuarial curriculum, and which exam would that be where you've studied about credit risk?
Yeah, I think that's again the beauty of actuarial science is we study a lot based on the life insurance, because again, life insurance or non-life insurance, we look at the long tail distribution. And when we study that, we see a different models coming in place. For example, Cox proportional hazard model, which I think a lot of you and your students might be aware of. We use a similar model in our banking side of stuff. So it's not, our actuarial examples might not directly call it out that this is a banking default model, but we use these models in our banking space as well. So I think any of these long forecasting models can be used for banking purposes. Specifically talking about where exactly we learn this model in the banking domain would be the SP10 and the SA10, or
Yes,
the
the
bank
new exam which
B100
have been
22.
introduced. Okay.
Yeah,
Yes.
these are the papers that IFO has collaborated with South Africa
Okay.
and
ASA.
ASA. And as IFO student, we can appear for these papers. I personally gave these two papers,
Oh,
and we intensively studied about the banking terminologies, the banking modeling,
got it.
what are the different regulations.
Got
So
it.
that's a very good way to kind of develop a very strong understanding of banking as an actuary.
Got it. Understood.
And
So,
even with,
yeah, go on, please.
yeah, I was just saying, even with CS2, CP1, CM2, I remember there are some small examples about default risk and uh,
Yes. We
those
we
kind of
did have
questions.
a couple of chapters on credit
Yeah,
risk in CM2 as well.
exactly.
Yeah.
And CP1, I think CP1 has a very, is a section of credit risk as well.
Correct. Right. So what I'm understanding here is that you're saying that actuaries are risk professionals, and thus and because we bring in a whole bunch of skill sets from traditionally in insurance, along with a lot of mathematical acumen, banking is also a domain where we are now, we have started to work and contribute and build models there because of, again, our background in terms of risk models, right? That's the
Yeah,
broad idea of it.
I would say yes, that's a good way of taking it up. But secondly, I would say that it's not something new that actuaries are doing. Like for example, I met someone who has been who's an actuary and being in the banking profession for like 30 years now. So it's not a very new area where actuaries are getting involved with. Actuaries have been in banks, supporting banks for quite a few years. But now you might see that with the increase in the risk side of things and the focus on modeling and getting compliance ready with IFRS 9 coming in, with a lot of stress testing happening, there's a need for having such professionals in place who can do active modeling, who can think on the spot, do a bit of critical assessments, solve the active problems. So as actuaries, you might see that there's a lot of involvement happening. Like for example, in my team, we have quite a big number of actuaries working on the banking side itself. So uh, I would say it's not a very new thing, but it's actively growing, is what I would
Yeah,
say.
but with that, Mrigank, if you see a majority of actuaries still continue to work in India. If you would, sorry, in insurance, if you would see, almost 90 to 95% actuaries are still involved in insurance, right?
Mm.
So it still remains a niche for us, right? With that, what proportion of your employees are non-actuaries, and where do they come from? They must also be doing very, very similar work. So who are these professionals?
Yeah. So I think most of my team, honestly, is like there's a very big proportion of actuaries involved in my team. But
And what is
let
this
me,
team called?
for us, we are like we were called risk modeling experts. We were called um, AI modeling experts, or there are quite a few names that we get eventually over time. But
Mhm.
what I'll maybe take a step back and look at more of an industry focus and see how actuaries are getting involved in different aspects. So maybe in the past, we like actuaries were always involved in the pension side of stuff or life insurance side of stuff, right? Maybe like 30, 35 years back, non-life became a thing where actuaries started moving into non-life and or general insurance. And that's when it was like, okay, can actuaries work in general insurance? Because before that point in time, it was actuaries were always thinking about the long-term duration stuff. So like pensions or life insurance, which had a longer tail. But then eventually actuaries started going into non-life, and now you see that non-life is a very big space for actuarial science. Banking on a similar side, it has there are actuaries working on it, but you might not see a lot of individuals recognized as actuaries working in banking. So, given I talk to a lot of people who have come from actuarial background in banks. They are, for example, some of the CROs or the model risk experts or model risk heads. They all have actuarial backgrounds, but eventually, given that they have been working in the banks for for a long while, their impression is more of a banker rather than an actuary.
But they
If
have
that
passed the exams and
They
followed that
have passed the
method.
exams. They Some of them are qualified. Some of them were like in a very like towards the last stage of qualification when they moved to
Okay.
banking, or
Okay.
they were working in banking.
Right.
And in terms of other people who work on a similar kind of projects that as an actuary I do, you might see that people coming from all sorts of backgrounds. Like I know some people with MSc, some people with MBA degrees, some people with like other degrees such as FRM, CFAs. So it's not something exclusive for an actuary. It's more of a collaborative effort where people from different walks of life, in terms of these finance degrees, come and work. So it's not just that okay, you are an actuary, so you're doing credit risk modeling. But as an actuary, we can do credit risk modeling.
Got it.
That's
So
ambition.
I'll give you the outsider's perspective of it, Mrigank, because I've seen both sides
Yeah.
of this.
Yeah.
When I did my master's degree in economics, uh, my college was one of the top three in India,
Okay.
almost, and it's IGIDR in Mumbai.
Oh,
So
right. Yeah.
almost, 90% of my batchmates are currently either working with the banks, or are working with credit card companies, or are
Nice.
working with the, companies that are providing services to these companies.
Correct.
And if you
Correct.
see globally, this entire space of quantitative finance, which comprises of both market risk and credit risk, it's largely dominated by quantitative, bachelor's or master's or
Yeah.
PhD professionals, right? People who are physics or economics PhDs would typically be heading the market risk departments,
Yeah.
right? And you have people with master's degree working there, right? And there are a lot of engineers again because of their coding skills, right? Uh, where is the white space? The thing is that these professionals have always worked there. Okay,
Yeah.
they have been hiring people who are like them, right? In the sense that if I've come from a certain college, I'll go back and hire there, right? So there's a strong alumni network that is
Yeah.
operating. And if you compare the number of actuaries that are working in this space, and you compare them with these other bunch of quantitative professionals, our number is minuscule, right? Most of these guys won't even know that actuaries work in this space. They would probably say, oh, actuaries are only good for insurance, right? So where
Yeah.
do you see a white space, since you've been working in this space for 4 years?
Yeah. I think it's a very good question, and I think some like a question I feel that every individual who's new into actuarial science, or who's getting into the actuarial science domain, or very young professional would be asking. Uh, it's one thing we need to understand here is it's not we are not trying to replace any profession. It's not like okay, as actuaries we are coming here in and we are saying that okay, MSc economics or MSc finance is not relevant anymore. It's actually is going to dominate. That's not the understanding, or that's not the point of here. It's more like as actuaries we bring in a very similar skill set in a lot of technical parts. We bring a very strong soft skill side of things. And C, we are taught about the terminology and the jargons of banking as well with our higher order papers, which I feel that when you look at MSc Finance or MSc Economics,
Correct.
there might be some introduction to it,
Yes.
but you or these individuals might not going into very strong details about the banking as a whole. But for example, when I did SP10 or or the essay exams for banking, we went into great details about the governance, the regulations, Basel, IFRS 9. We spoke about the pillar, the how capital is calculated. We spoke about each and every line of risk, how modeling is done, how monitoring is done, how can it be improved, the strategy. So, as actuaries who have studied these papers, at a very young age or at a very young level, we are very well aware of the entire banking structure, which the senior banking professionals might find it very valuable, because when we come in with a very strong theoretical knowledge which the banks might want. And for an individual coming in, maybe like just fresh out of college, might take a few years to develop. So, there we get an upper hand on the knowledge that we bring in. But again, like my point being that it's more of a collaborative exercise because engineers, they do coding for years. So it's not about an actuary coming in and saying that, okay, I want to replace all engineers in the coding. But as actuaries, we know modeling. We have studied coding in our actuarial exams. We understand the problem statement. We understand what the banks really want, what the external environment want. So it's more of a collaborative blend that we bring in across a lot of skills, as well as get given the exams that we give. It's way details, very it's challenging. So we bring in a very depth and breadth as well into
Got
the
it.
profession.
Understood. So, see, historically, the reason these employers have been hiring,
Yeah,
these quantitative masters and PhD professionals is because they have the aptitude to
yeah,
learn a lot of these things, right? That
yeah,
is all they are bringing. These are particularly in India. If you see most of these colleges which offer a MSc Quant
mhm,
economics or statistics have a selection rate of less than 1 or 2%. So these are very smart quant professionals, but of course they don't have any subject matter expertise. They come into banking and then learn about banking,
yeah,
right? Or come into market risk and then learn about market risk, right?
mhm,
Through reading books and through their work, right? So that sort of knowledge acquisition happens at a later stage.
mhm,
I think, as you rightly pointed out, our advantage is that our curriculum has now started to encompass
yeah,
a lot of that theory, so we are more ready, right?
yeah,
But then I think the advantage there with them has been that they've always been in that space, right? So that brings in a strong alumni
yeah,
network. And I'm asking you this question since you are a part of the advisory committees on banking for both IA and IFOA.
yeah,
Uh, what are the institutes doing in order to ensure that banking as a space understands the actuarial skill set, right? And that over the next decade we can have more actuaries working in this space.
exactly. I think that's a good question you have asked, because I think I'm quite happy from the advisory perspective to answer that. Again, I'm not the speaker for the advisory groups, but as advisory committee members, when we discuss about what are the next steps and how we go about it, we look at two sides of the problem. One is A, creating the demand for actuaries in banking, and B, having the supply ready, because when banks start demanding actuaries, there need to be enough pool of resource which can go and work. Because if the supply is not there and there's a demand, then the demand is going to shift somewhere else, and all the effort created to create the demand is going to move away. So on the supply side, for example, IFOA introduced the banking exams. So it's creating more actual science professionals who are ready for banking. On the demand side of stuff, as bodies, IFOA, IA, they have been engaging with banks. They have been talking to the alumni network of individuals who are working in different banks to make them understand how, as actuaries, we can contribute. So it's more of a work in progress right now. Like last week, we had a webinar from II where we spoke about banking actuaries, how actuaries contribute in banks. We extended the invitation to quite a few senior bankers as well for them to get aware. So there's a lot happening from the advisory committees on making bankers and senior bankers aware of how things are happening. For example, even on IS side, people are trying to get involved with the regulators and the central bodies to help them understand where, like for example, IFRS 9 is coming up, climate risk is area. How, as actuaries, we can contribute a lot in these new upcoming areas. So, in short, I would say that there's a lot of work happening to promote banking actuaries. Uh, like 5 years earlier, there were hardly a few companies that were hiring, but now there are the number of companies who are recognizing
Yeah.
banking actuary
So, would
professionalism.
you be able to help me understand what are some of the employers who are hiring banking actuaries? Because you work with the Big
Yeah,
Four
yeah,
consulting, and then I'm assuming all the other Big Fours also have
yeah,
similar teams, right? But who are the other employers?
yeah. I think I would say one of the bigger hiring companies for actual talent is on the consulting side of stuff rather than the core business. So maybe like all the big fours, Deloitte, PwC, EY, KPMG. I know people in all of these companies who are maybe like in the actual education working there. For example, I know PwC in Mumbai, they have a really strong actuarial banking team with I think 20 plus actuaries qualified or student actuaries working on the banking side of things.
Hmm.
Even in UK, they have a very big team of
Hmm.
actuaries.
Hmm.
Then you have other small consultancies
Hmm.
that hire actuaries on the banking side.
Hmm.
Uh, One difference here is just maybe like as individually search banking actuarial jobs, that's something that might not be very well reflected.
Got
It's
it.
easier to find like a non-life actuary or a health actuary job
Yeah.
when
Yeah.
you do LinkedIn or Google. It's
What are
more
they
like,
called then?
yeah, I'm coming to that. It's more around the keywords such as credit risk analyst or maybe
Hmm.
like a market risk analyst.
Hmm.
So maybe just understanding on the side you want to work on,
Hmm.
try looking for those kind of jobs.
Hmm.
And most of the employers are now getting aware of what actual degrees are.
Right.
So even if you say that there's a credit risk opportunity open and you say that as an actuary, I've studied these parts, I
Hmm.
can understand your ECL modeling, for example, which is a
Hmm.
very common thing. I
Hmm.
can understand the long-term structure of it. I can make models.
Hmm.
That's what the recruiters or employers want,
Hmm.
rather than coming up with a degree and not having a very well knowledge about it. So it's
Hmm.
more about as young professionals, we need to kind of explicitly say what we are good at in that one,
Hmm.
and not just call us an actuary.
Hmm.
Eventually, there's going to be a time where as
Got it.
actuaries we are going to be very well recognized.
Yeah.
But right now, some companies do recognize,
Hmm.
but for others, you need to just call yourself out that okay, I have this knowledge, and
Hmm.
I'm sure they're going to welcome you very well with
Got
that.
it. But have you seen examples of banks directly hiring actuarial aspirants or qualified people?
Like I know a few people, qualified individuals on a senior level in banks working, like senior qualified actuaries working in banks.
Hmm.
Uh, to be fair, I was recently told that there was there was a bank that was hiring interns, the
Hmm.
actuarial interns in
Hmm.
their, I think, market risk domain or credit risk domain in
Hmm.
Mumbai.
Hmm.
Uh, I speak to a lot of people. Some of them are in like mid levels who are studying actuarial science along with their full time job in banks,
Okay.
planning to specialize in banking again.
Got it.
So it's more like I would say consultancies are still acknowledging actuaries a lot more than
Hmm.
banks.
Hmm. Hmm.
Banks
Hmm.
still have a way to go, but with coming new regulations and
Yeah.
the new kind of risks that are coming up, maybe
Yeah.
banks start acknowledging how, as actuaries, we can contribute to
Got
it.
it. Got it. I think it seems to be a change that has started because it's always this way that you have senior folks getting into these roles first, right? And then they pull people like them,
Yeah,
right?
exactly.
Also with consulting, they always move like before the industry, right? And once you see enough consultants coming in who are actuaries as banks,
Yeah,
you would probably want similar professionals on your payroll, right?
yeah. And
So that
uh, I
yeah,
would say,
go on.
Romit, here like the context that I gave is more of an Indian context right now, given I think most of your audience would be in India.
No, no,
But
we have a very global audience. Almost 55% of our viewers are outside India.
wow, that's a good one, Robert. Then in that case, I'll give a global context as well, a little. So maybe in the South Africa, where banking actuary is well established, there are like a lot of the banks, the big banks, they all hire actuaries. Their multiple like departments are just actual departments. So maybe like credit risk departments like mostly driven by actuarials, or even in Australia there are quite a few companies, banks that hire actuarials,
Okay.
actuarial professions. Even in UK, you'll find a lot of banks having like some teams which are filled with actuarial students. So when I say that in India, it's more like an upcoming thing.
Of course.
Consultancies and banks are recognizing, but across the globe, you might find banking actuaries across a lot of banks and consultancies, and it's not like a surprise for people.
Got it. Understood. Fair enough. Makes sense. So I think in India, the context is slightly different where, traditionally the smartest people have gone towards engineering or, more sort of other quantitative professions. And they have sort of covered that space already, right? Now I think for us to get in, uh, there needs to be a systemic change, right? And I think that has sort of started with obviously people like you, right? Then let's just try and understand. So there is clearly scope for actuaries in banking, right? There's a lot of value addition we can do. As a young actuarial aspirant, right, who's just passed, let's say, 2 to 3 exams, right? how do I hone my skill set in such a way that I am able to get into this space? uh, how do I curate my resume in such a way? What are the sort of additional skill sets that I acquire so that banks take me seriously? So what would be your advice on that?
Yeah, I think to s- I think to stand in the line for these kind of opportunities, be it in consultancy or in banks, uh, it's good to have these papers on your plate. It does make a lot of difference. It does give you a lot of credibility that you are strong in statistics, economics. You have a good problem solving, understanding capability. I think recently, or maybe it was always there, there's a very good trend of knowing programming. So people who are aware of programming, who can do modeling, are add more value to the firm than people who are not aware of how programming works. So personally, if I would like to have someone as a programmer in my team, other than the compared to someone who's not a programmer, so it's good to learn these programming languages. So for a lot of banks, SAS was a very strong programming tool. Now, like there
But
was a
that's
time when,
withering out now, right? SAS
yeah,
is sort of going out of fashion.
I think some of the large banks still have SAS in place, but like personally, I am looking more on the Python side of stuff because Python is the new thing. It's not a new thing, but it gives you a lot of opportunities.
Correct.
With a Gen AI also coming in, Python is a
Yes.
little more flexible. It
It's just
helps you
being
make strong
open
teams.
source has
Exactly.
made all the difference. Yes.
Yeah. I personally, I'm a big R programmer. I
Okay.
love R just because how easy things are in R.
Yes. Yes.
Oh, and given I've worked a lot on R, so having these programming skills is very important.
Uh,
It makes a lot of difference on the CV, I would say. So,
yeah.
and as if you're someone who's looking for just on the banking side, okay, you want to get into the banks.
Hmm.
When you're learning these R programmings or Python or SAS, try to look it from more of a different risk angle.
Hmm.
So, like last week, I was suggesting someone to go look at more of a IFRS 9 modeling using Python. Just do any course. I think online these courses are quite cheap as well.
Hmm.
That way, you'll understand coding and also you understand regulation a bit and how
Yeah.
to link both of it. So
Correct.
having these skills on your resume just
Hmm.
makes a lot of difference because if you go to someone
Hmm.
who's maybe looking at capital modeling and you
Hmm.
say that okay, I have done Basel modeling for a as a project
Hmm.
using,
Hmm.
I I don't see a reason why the person is going to discriminate between someone who knows this and someone who doesn't know this
Hmm.
just
Hmm.
because the other person comes from a different college or a different alumni network.
Got it.
So
Hmm.
and apart from that, I think one thing as professionals we need to pay a lot of attention on is communication as well as integrity or honesty.
Hmm.
So you need to be honest on your resume. You need to be the same person who
Hmm.
you're coming up with and not just uh, pretend to be someone. I think that makes a lot of difference
Hmm.
because I've seen students come up saying that okay, they act as if they are a different person altogether,
Hmm.
but that's not the case. I think people just want a transparent a person to work with rather than
Got it.
someone. uh, and the
Understood.
last one is actually talking about what you do, what you know, in a
Hmm.
very positive, in a very honest
Got
way.
it.
Like you need to communicate because with all the machine learning and Gen AI stuff coming in, it's
Hmm.
not just about getting things done. It's about explaining things as well now.
Got it.
So
Got it.
it's really important to have like communication, technical skills, and
Got it.
the most important integrity in place.
So let's talk about this in terms of advice to a young actuarial student who's just starting out. Okay, and very very specific advice, right?
Okay.
Of course, we can give them broad advice which applies across, but
Yeah.
if they want to get into this space of banking,
Mm.
one thing you're saying is that advocate for the specific things that you have studied in the exam and
Yeah.
apply for wider roles such as market risk and credit risk analyst,
Yeah.
right? So that these employers know what is it that you know and what is the value you can add. Second, you
Exactly.
are saying that learn about regulation, right, which is specific to banking and the banking business overall, and build some projects which would showcase your knowledge and also like your programming skills, right?
Mm.
uh, Of course, Python, because it's open source and it's used so widely, is very helpful. So
Yeah.
preferably do that project in Python, right?
Yeah.
Specific question there. I am starting out for my first job after my final year of college. Let's say I have anything between 3 to 7 exams.
Yeah.
Should I take up a life insurance or a general insurance role? Or should I, try really hard to get into a market risk modeling or a credit risk modeling role and fight there? Because anyone who I have come across personally working in these, banking or finance roles, someone I was speaking to was also working in market risk in Bermuda. Okay. Even their path was very similar. They initially started out in insurance with a big four consulting firm and then transitioned into their market risk team, right? For you as well, you initially worked in, you know, life and health role and then transitioned out, right? uh, would you advise people to take up these life and health roles first and then transition, or would your advice be to go into a completely new area and be the only advocate of actuarial science there? For example, American Express and Mastercard hire a lot of credit risk modeling professionals. Should I just target those roles directly?
Yeah. A good question again. I think both of it's more about opportunities available, firstly, and because for few of the lucky people who really want to go into banking, all these consultancies, they have the grad program, they might make it through it and get
Yeah.
direct into the banking space and
Right.
start from the scratch. But again, there is a limit to the number of opportunities that is available as well as the timing of it. So for me personally, when I joined life and health, it was more about the opportunity that's available in the market. uh, I in my first round of interview, I was said that okay, I don't see you have good programming skills. We won't be able to go forward with it. But I still got a second round of it, and within those two rounds, I built an entire project on pricing a life insurance product on R and presented it. So when I did that, the recruiters were confident that A, I have the zeal to learn, and B, I have the ability to deliver. And when I talk about building these projects for yourself and having it on a resume, the recruiters can see through these things. So if there's an opportunity, for example, market risk opportunity coming up or credit risk opportunity for, as you said, Amex or MasterCard, which they hire. If you have these things on your CV and you talk about it in the interview, that makes a very strong impact. B, coming to the point about these companies, I know people in these companies who are also from the actual domain, working in different of the different risks. I know someone working on the climate side in Amex and doing really well as an actuary.
Hmm.
Though he might not present himself as an actuary, he might be a banking professional,
But
but he comes from an actuarial background.
But then the real question there is, sorry to interrupt you, were they hired because they had the actuarial exams or because they came from the actuarial background, or were they hired despite it or irrespective of it?
Yeah, I think that's the part over here. uh, when you say you are an actuary in a life or a non-life domain, you get into the interview part of it. Just because you're an actuary, and then you're assessed whether you are qualified enough to work there or capable enough to work there. In banks, the actuarial terminology is not very well used. So a lot of the HRs or the recruiters, they might not be aware of actuary as a term, but they would be aware of the banking terminologies such as credit risk, market risk. When you talk about the things that you study under these, the kind of models that you study under these in your actuarial exams, when you write these things in your CV, it makes a difference rather than just calling yourself an actuary.
Got it.
So, if you, as a young professional, going into a bank or a consultancy, which is not quite aware of actuary as a terminology, describe what you have studied as an actuary, which is linked to the bank, what
Hmm.
you're really excited about, passionate about, why you're working in the bank. If, for
Hmm.
example, you're excited about Merton model or Black Scholes model, just talk about it. Mention that you know about these things,
Hmm.
and
Hmm.
that's what is going to create a difference.
Got
Because,
it.
as you mentioned, Romit, very true. When the it takes time for a shift to happen. When there's an existing set of people who are aware, who are not quite aware of actuaries, it's going to take time for them to get aware. As professionals, as organizations, as institutes, we are helping, we are talking to them, making them aware. But as individuals who are trying to find jobs, they might have to just pitch in their skills and their knowledge in a more detailed way rather than just calling yourself an actuary.
Got it. Understood. So let's again get into the specifics of what is the kind of projects that people can build, because I think that is interesting advice, right? One, you said you built something on the life insurance side. Talk a bit
Yeah.
about where did you get the data from? What did the model exactly do, right? And then can you suggest someone what are some of the resources that they can look at
Yeah.
from a banking point of view? How would they source their data? What are some of the models that would be doable by students and can
Yeah.
showcase their skills, and how does one execute it?
Yeah. That's a trick question, I would say. Asking about the model that I built, because it's been quite a few years now.
Hmm.
Uh,
No, you
I
don't have to get into specifics of it,
Yeah,
just
yeah, yeah.
broadly
It just
get into
brings me
the
back to the memory, down the memory lane. I think what I had done was, again, data is an issue for big organizations. So individuals like you and me, it's very hard to for us to find data. But again, there are a lot of open source data that's available online, which you can use. When I was building my model, I had no data, so I used the II tables. You remember the tables that we get for our actual exams?
yes,
So I used that as a probability.
yeah,
Then for expenses and all, I just put assumptions in place. So what happened? It was like the first interview, first round I had, and I spoke about the kind of knowledge I have or what I'm interested about, more of a person. And they said that we are more of a we need a person with coding background, because the kind of role involves a lot of coding, a lot of data understanding, which I did not have on my CV back then because I was fresh out of college. So I had built few theses and research papers, but it never had like intense coding in it. So
hmm.
I was like, okay, and I was like quite pretty sad as to like it was someone calling me that you're not capable of something, and I felt a bit like I was sad, but I felt like how can someone call me that? I took it up a
That's
little more seriously.
actually, it's a good thing. Very few people are
Yeah,
very honest in interviews, so if
yeah,
someone's being that honest with you, I feel it's a blessing, no?
yeah, yeah, absolutely. So what I did was, I think it was uh, a day's gap between my first round and second round. And after the interview got over, I took out my CD5 books. I looked at my actual tables and made like a project. I'm like, okay, let's try and demonstrate that I can code, I can understand the logic behind it. So I made a pricing model, if I remember correctly, for a insurance policy, a term insurance policy. Took the data from the II actual tables or the IFO actual tables, made my own assumptions for expenses and any reinsurance claims that would come in. So had a beautiful list of all my assumptions, all my
Got it.
calculations, all the data feeding in. I did it
Got
on
it.
R because that was the most like easy to use language, easy to
Right.
download, easy to have it on your laptop. I
Got it.
built it up, and the second round, when again it was more picked up, like I don't think we will be able to do coding. So I'm like, okay, let
Hmm.
me present something. I presented
Hmm.
my code. I'm sure there might be flaws in it, but I
Hmm.
think it was more about the intent. It was a working code. The model was working. It was giving
Got it.
results. It had
Hmm.
assumptions, everything. My
Hmm.
limitations stated well, and that
Hmm.
actually impressed my employer a lot. So I think now we are friends, like my previous employer and I. So we speak about it, and it was the first time even he came across someone doing this.
Hmm.
And to be fair, I've a lot of my mentees and my friends have tried this after this incident of mine and has pretty worked with them. So I feel it's more it's a very honest way of showing that you are interested, what you can
Correct.
do, what you can bring to the
Yes.
table.
Yes.
And it's fine if you are not able to make a complete working model.
Right.
It's more like
Right.
you get to understand. And even if
Yeah.
it just doesn't work well in an interview, it's
Hmm.
not a trick for the interview. It's more of a trick to know what you are doing, how you're doing.
Right.
So even in the banking side, I think someone who has understanding about any of the regulations, how it's working. You don't have to
Hmm.
be an expert on it, on a guru in it. You'll
Hmm.
eventually learn. But
Hmm.
if I personally feel it's more of a personal opinion rather than a company specific opinion or something, that if you are able to honestly show your interest in something, uh,
Hmm.
a capability in it, and as a
Hmm.
fresher, we don't have a job in the background to talk about, right? So
Correct.
spending a few hours looking at these online resources,
Yeah.
it makes a big difference. And
Hmm.
lastly, to your question on where to get the data,
Hmm.
it's a challenge. But I
Hmm.
think even if you don't get the correct data, just generate data. I think with GenAI capabilities, you can just generate random data. give it
Hmm.
a disclaimer that it's a generated data. Uh,
Hmm.
Again, it's a trick on how you generate data.
Hmm.
What kind of modeling assumptions have you used? What kind of assumptions have you used? So if you
Hmm.
bring all of these to the table, I think the employer must be pretty happy. And even
Got
if
it.
it's not a job perspective, you as an individual get to learn a lot, translate your
Yeah.
theoretical
Yeah.
understanding into
Yeah.
practice.
Got it. Understood. Yeah, that is 100% true. And I've always worked in domains which were unrelated to actuarial. And again, the expectation with the freshers everywhere is just the same. One is intent. Second is the ability to figure out and deliver things.
Yeah,
Right. So most people don't understand. Even if you're able to showcase that, it's a great thing.
yeah,
Right. But with that again, just a specific question on what would be some of these models that you would suggest that people can reproduce, if you can from the top of your head suggest some of these models that people can reproduce by generating dummy data.
I think given I've worked a lot on credit risk, like any credit risk model such as IFRS 9 ECL or your Vasisek model on the PD calculation or the LGD modeling or any of these modelings like PD, LGD, EAD, EIR, IFRS 9 ECL on a package might be good for any credit risk kind of role. On the
Okay.
market risk side of things like option pricing or maybe like looking at how derivatives are getting valued, those kind of modeling or valuation modeling might be really good stuff.
Got it.
Interest
Understood.
rate forecasting might be a good
Okay.
thing.
Hmm.
So, like whatever topic you read in your actuarial exam,
Yeah.
whatever the role is, just kind of make a bridge that okay, if this
Right.
role is asking for market risk more on the derivative side, let me just look my CM2 books, understand how option pricing is done, try to
Hmm.
build a case study out of it, and just
Mhm.
talk about it.
Got
It's
it.
again more of a personal opinion, which I feel might be helpful, and not like
Yeah.
a industry expectation or industry perspective. So, but it worked
Right.
for me, worked for my friends. So, yeah,
Yeah.
if work for others, do let me know.
That is some solid advice. Yeah. Yeah. People will, I'm sure they'll comment once they land a job based on this that I got a job using this sort of a project. Okay. Great. So, one last thing I want to talk about is the SERA qualification. So, what is SERA all about? How has it helped you in your career? Right. And should people who are thinking about banking consider SERA, or enterprise risk is something which is another domain which has some overlap with what you guys do?
Yeah. I think Sarah is actually very close to my heart, SP9 as a paper, because I said when I was young, I was looking for advice, and the advice I got on SP9 is like it's very tough. And I was like, no, I want to give it because I enjoy risk management. And I think this is one of the papers I really enjoyed studying. It has a lot about risk management, quantification, how do you assess it, how do you mitigate it, how do you monitor it. Then a very interesting part of interactions between different kind of risk. So as a theoretical subject, as a practical subject, SP9 is really strong. uh, I was talking to this one really senior actually in South Africa, and he was like, SP9 should be made mandatory like CP1. Uh, that's a personal perspective again, but what I'm trying to say is like it's a very powerful subject to understand risk and across the entire spectrum rather than just looking at each in silo. So a very holistic risk management understanding.
Got it.
Sarah is, I think, just it's a degree that you get once you clear SP9. You qualify as an actuary, and you sit for a Sarah seminar where
Hmm.
you basically talk about the learnings of SP9. You do a few case studies. You present to a team of very senior actuaries who act as
Hmm.
a board in a capacity. They give you case studies. They question you. So it's more of
Hmm.
a degree you get at the end. How has it impacted my career or my understanding? I think from a knowledge perspective, it impacts on a very different spectrums. Sometimes I'm not even very well aware of how it's impacting. So,
Okay.
like,
So it's
you
a
talk
very
about
subconscious
it's
effect.
subconscious. Like, for example, I was doing some copula modeling
Hmm.
recently. It I
Hmm.
studied in SP9. It just went through it. The kind
Hmm.
of KPIs and indexes that I've studied there, I just use it on my
Hmm.
day-to-day work. So
Got it.
it's very hard to specify that okay, I did this, that's why I know this. But
Yeah.
I would say the knowledge has been very fruitful for me in various
Hmm.
aspects, and especially in banks, when we talk to senior people, having an
Hmm.
understanding of enterprise risk is very helpful. So
Hmm.
last 2 weeks back when I was talking to a few of the like a very
Hmm.
senior banking professionals, and
Hmm.
like the CROs and all, don't just look at one risk at a time. They look at multiple risks,
Yeah,
and
yeah,
having that background, having that understanding of enterprise risk as a whole makes
yeah.
a big difference
Hmm.
to being able to relate to what these people are looking for or looking at. So
Yeah. In one of the previous episodes of the same podcast, we had someone called Henry Liu. He
okay,
was working at Amazon.
yeah,
So he, worked on core enterprise risk and making decisions like what are the sort
yeah,
of risks from the logistical business that should be outsourced, taken insurance for, and what should be
mm,
kept in house. So his role was a very, enterprise risk specific role.
okay, yes. I
So
think yeah,
yeah, I think that space is gaining a lot of traction. Looking at risk holistically.
yeah, I think yeah, it's because again, like risk sounds like a very downside term that okay,
Mhm.
let's just mitigate risk, just get
Yeah,
rid of risk. But we need to understand like FS, like financial service companies or any of these
yeah,
companies, we make money with managing risk actively. So a
correct,
bank makes money by managing credit risk or
correct.
market risk. Uh,
Yeah.
an insurance company makes money by managing insurance risk. But
Mm-hmm.
just focusing at one risk at a time
Mm.
limits the opportunity. But if you can manage the entire risk as a whole, it just gives you a lot of upside potential, which can be extracted and which can be converted into good revenue. And
Got it.
just managing these things so that the
Mm.
insurance company or the banks don't go bust and there is sufficient management in place.
Okay. Yeah, I think risk is a very negatively connotated word, but generally, for us, we know mathematically risk just
Yeah,
means variance or standard deviation. So there can be upside risk as well, right?
yeah,
Which is basically, yeah, a good thing. Great. So thanks a lot, Mrigank, for taking time to speak to me and doing this. I'm sure this will be very helpful to young actuarial aspirants who are thinking about banking and just evaluating the actuarial career path. So I want to end this with two specific questions. Okay. One is what would be your advice to young actuarial aspirants who are just starting out? What would be that one thing which really, really helped you? What would you tell Mrigank from 5 years ago or 7 years ago, right? Uh, and the other question is, what are some of the top trends that you're seeing in the actual profession now? How is the space changing, and where do you think it is headed in terms of how will that specific trend shape the profession?
yeah. I think the first one, what advice would I give someone like 7 years younger, or um, would be I think have faith. It's a long journey. It takes time. It takes patience. Uh, it takes a lot of hard work. So give it all, but do enjoy the entire process because I think even now I really enjoy the times when I would take study leave and study for the exams, getting that click when then something new concept understand you're able to understand a new concept. So
The joy
enjoy
of
it.
learning.
Sorry,
The joy of learning.
the joy of learning. Yeah, I would say enjoy the entire process. There might be failures on the way, so don't take it on your heart. Those failures are quite small compared to the longer life that stands ahead of us. So have fun, keep reading a lot. So just reading the actual exam materials might be good enough for exams, but not for the bigger life that's ahead. So keep reading any regulation that comes up, any papers that the big fours are writing, or LinkedIn articles. Just be open to learn, come up from different sources, attend the webinars, look at different podcasts. Just be very active to learn from any source that comes up with, and not just be restricted. Okay, this is my material. I need to get this and get off the exam because
Yeah.
you can easily become an actuary when you study all your material and know things, but you're going to enjoy, you're going to start
Mm,
understanding different things when you see different
mm.
perspectives
Yeah.
across the globe.
Yeah.
Also have a very global mindset, be open to new things, not just be restrained in one domain, because as actuaries we are taught and we have the freedom to move about. We have the skill
Mm,
set which is very, I would say, transferable. So
mm.
think of new opportunities that come up and yeah, use your, I would say, the skill set that we have to see and tap onto opportunities. And Romit, what was the second question that you had asked?
What are some of the what is one of the top trends in the profession?
Yeah.
How do you see the profession changing now?
Uh, I would say profession is calling for a lot of tech advanced individuals now. So I think it's good to know the theory, it's good to know the underlying basic
Hmm.
techniques. But now I think with the world, it's just not actuarial profession, it's the world in general. There's a call for more being more efficient, being really strong with technology, trying to make the most out of the opportunities that are coming up in any sector. For example, AI being one of the big sectors. Automation is really key. So how can you tap into it? How can we use the actual knowledge, actual aspect to model things, to validate things, to even just use these things, these tools, I would say. So be adaptive to this, be a bit flexible, not be very constrained that okay, as an actuary I know my reserving part and I'm just going to stick to it. Try to see if you're
Yep.
doing reserving, pricing, capital modeling, ESG tools, how you can expand your domain, use uh, the tools, use other colleagues who are good with other parts, and be a little more collaborative and grow in the field just rather than getting restricted to one particular theory.
Got it. Got it. I think both of your pieces of advice can be summarized with that one quote from Frank Reddington: "An actuary who's just an actuary is not an actuary." Right. So
Yeah,
that is what you said in like both of those
yeah,
pieces, right? Like just have a wider perspective,
yeah,
right? As a student and as a professional.
yeah.
Thanks a lot, Mrigank. This has been a good conversation, and I'm sure it will be very, very helpful to people. Thank you.
Thanks, Roman. Thanks for doing this. And yes, speak soon. Bye bye.
Okay. Bye bye.